Hey traders, welcome to this week's weekly market prediction video. If you're new, this is a video we do each and every Monday discussing the levels of structure that we're going to be paying attention to for trading opportunities, something that can be extremely valuable for your trading. So if you are new, make sure you click that subscribe button and also go ahead and click that little notification bell so you're alerted every Monday whenever we come out with these videos. Today we'll be going through the top 5 major pairs and talking about the levels of structure we're paying attention to for trading opportunities, as well as how we plan to take advantage of the market if it gets to these levels. As always, we'll also be talking a little bit about trading psychology, backtesting, and the importance of a trading plan. So if all that sounds interesting, then make sure to click that like button while the intro and disclaimer roll, and I'll see you guys on the other side. Alright traders, so we're going to start out this week's analysis on the dollar Swiss. And this is a pair that performed really well based on last week's predictions. In last week's predictions video, we discussed this level here as being a possible level of important structure, and we discussed the 0.9740 level as being a place we would be looking for buying opportunities. As you can see, this market pushed up pretty dramatically from that level all the way up to our next level of resistance. So what I'm going to do is play you guys a short clip from last week's video for those of you who didn't get to see that video, and also as a recap for those of you who did, where we were discussing this analysis. So let's check out that clip and I'll be right back. The dollar Swiss is now pushed down into a level of structure we talked about last week. We talked about this level as being a possible level that could support this market. Reason being because of all the times we have seen support and resistance out of the same level in the past. Look right here, you can see this level acted as resistance multiple times. So that leads us to believe that we could see a nice bounce off this level. And that's something we'll be paying attention to for the remainder of this week. We'll be looking for some buying opportunities here out of the dollar Swiss in this zone. Now, if we do get those buying opportunities out of this level, the next key level of structure we'll be looking at to take off targets and to possibly go short here on the dollar Swiss is at the 0.9873 zone. So back on this current dollar Swiss chart, you can see that analysis worked out quite nicely, pushing all the way up to our next level of resistance from the area we pointed out in last week's video. And now that we've done that, we're actually at a level of resistance here around the 0.9873 zone. This is an area we'll be looking for shorting opportunities down on lower time frames. So something really important to remember, guys, that we discuss a lot here at the trading channel is just because the market's at these really important, these key levels that we've pointed out, doesn't mean we're going to automatically take a trade from these levels. A trading strategy consists of not only entry reasons, of not only conditions, but conditions combined with entry reasons to give you an edge over the market. And even that still does not mean that we trade every single time there is, let's say, a shooting star candle at resistance. That's not a trading strategy either. This can be the start of a trading strategy, but you have to have specific rules that define the conditions. If we're trading shooting stars at every level of resistance, what defines a level of resistance? Write those rules out. What defines a shooting star candle? Write those rules out. Now we have to get even further into it. Where are we going to put our stop loss? Where is our target going to go based on this strategy? So there's a number of different rules that you need to consider, a number of different aspects to a trading strategy in order to make it rules-based and easy to follow. Now, after the creation of a strategy, you still are not done. Just because you've created a strategy doesn't mean it's going to be profitable. And if you have a strategy, let's say, is 45% accurate, and it gives you a 1-to-1 risk-reward ratio. If you tested a strategy and this is what you came up with, would you consistently trade this strategy? No, if you stay disciplined to this strategy, you're going to trade yourself directly into an empty trading account. So how do we figure out if we have a strategy that gives us an edge over the market, or a strategy that, let's say, is 55% accurate at a 1-to-1 risk reward? How do we find that information out? Well, we have to look through historical data in a process called backtesting. And this is why backtesting is so important. Not only does it help you with trading psychology and discipline, it's also the only way you're going to be able to tell if you have an advantage of the market whenever you place a trade. So those are some important details that I thought you should definitely consider while trading. If you don't have a backtesting spreadsheet and you'd like to get your hands on the one that I use personally, there's a link in the description for that, labeled Spreadsheet Mastery Course. But now let's continue to talk about the dollar Swiss. Here we are at this level of resistance, and that's exactly what we're going to be looking for. It's our specific entry reasons to go short here on this pair. Other than that, if the market does break above this resistance level that we're at currently at the 0.9873 area, then we'll be looking at the 0.9974 zone as our next level of resistance and our next level for a shorting opportunity. If this market pushes down from the level we're at currently, we'll be looking yet again at the 0.9740 level for support. And if we break below that area, then we'll be looking at the 0.9628 zone as our next level of support. So that's what we'll be looking for here out of the dollar Swiss. We're actually going to move on to the dollar yen now and take a look at what we're expecting out of this pair for the rest of the week. So let's go ahead and move on to the dollar yen. So here on the dollar yen, we were looking at the 111.79 area of support last week, and we talked about the market possibly being able to push up from that level. We had a market that was breaking above structure resistance after structure resistance, right? And then we broke above our daily resistance as well. We pulled back into that daily resistance, pushed up once more, and then pulled back into that same daily resistance that had now become support. And then we got a nice push off this market as well. So I'll show you guys a very quick clip of last week's market predictions video where we were pointing out the 111.79 area on the dollar yen. And then we'll come back and discuss an entry reason that actually happened on a smaller time frame on this pair. So let's head to that clip and I'll be right back. Alright traders, so here we're on that dollar yen pair, and we're actually floating around a level of structure we talked about in last week's video for a possible trade to the upside. We're floating around a possible buying opportunity zone here on this pair. So for the immediate future on this pair, we'll actually be looking for a buying entry reason since we are floating around this zone. This zone means our conditions have been met, and now we're going to be waiting on our actual entry reason from this area to take this trade going long. Now there is a situation. So the dollar yen analysis from last week working out quite nicely. Market pushing all the way up to that 114 even handle. And if you saw last week's video, you'll know that that 114 even handle is actually an area of resistance that we were looking for to take a short position from if we get some kind of entry reason. So that's what we're going to be paying attention to here in the immediate future on the dollar yen. And we'll talk a little more about that in just a second. But for now, let's go ahead and go down to a smaller time frame to check and see if we can find some kind of entry reason in this area at the 111.79 zone. So here we are on the 1 hour time frame. Our blue line represents the 111.79 area of support. Do you see a way we could have gotten involved in this trade? For those of you with double bottoms and double tops in your trading plan, then you absolutely have a nice potential trade right here with this double bottom at our previous level of major structure. Now, does that mean that we need to take every single double bottom and double top at these levels of structure? Well, the answer to that is yes and no. It depends on what's in your trading plan, guys. If you just go out there and blindly place trades based on double bottoms and double tops without some kind of conditions you need met in the market, without a certain place you know you want to put a stop loss in a certain place for targets, chances are you will not be successful using this. That is why having a trading plan is so important. So let's head back out to the daily chart and talk about some other levels we're paying attention to throughout the rest of this week on the dollar yen. Alright, so for this pair, just as we were discussing a second ago, we're sitting right at the 114 even handle. This is a place we'll be looking for shorting opportunities throughout the week. And if we break above that area, then we'll be looking at the 115 even handle for our next shorting opportunities. Now, if this market falls from this area, then we'll be paying attention yet again at the 111.79 area for a buying opportunity. If we break below that, we'll be looking at the 110.73 zone for our next buying opportunity here on the dollar yen. So those are some of the things we're paying attention to on the dollar yen for the rest of the week. Let's go ahead and take a look at our next pair. We'll move on to the euro dollar. So here on the euro dollar, not much has changed since last week's video. Last week we did have a trading opportunity from this area. We ended up hitting some pretty nice profits on the way down here. And currently this market's still floating in between the 1.1686 zone and the 1.1872 zone. So for the immediate future, we may be looking for this market to continue down and possibly get to our 1.1686 area. If that happens, then we're going to be looking for a long opportunity from that area. But if this market breaks below that area, then we have a long ways to go down all the way to the 1.1453 area for our next level of major support. And through this area is when we'll be looking for shorting opportunities on the way down. And if we get down to that 1.1453, that's where we'll look for another long trade possibility. Now, as for resistance, if this market pushes up, we'll be looking at the 1.1872 zone yet again for our first level of resistance. And if we push above that, then we'll be looking up at these highs over here around the 1.2050 all the way to the 1.2060 zone for our next level of resistance here out of the euro dollar. What we're going to do now is go ahead and move on to the Aussie dollar. Alright guys, so last week we discussed the 0.7893 area as being an area we were looking at for a shorting opportunity. The market had already pushed down off of that level by the time we released the video, but we talked about if there was a pullback up into that level, we'd be looking there for a shorting opportunity on this pair. So I'm going to play you guys a short clip from last week's video on the Aussie dollar, and then we'll be right back to discuss the analysis and some entry reasons that could have been taken advantage of out of this pair. But now this market has pushed up into our next level of resistance based on this higher time frame chart at 0.7893. So that's going to be something interesting to keep an eye on for the rest of the week. Maybe we'll get a nice little pullback up into that level and an entry reason to go short out of this Aussie dollar pair. But for now, we have to change. So as you can see, guys, this market did end up pushing back up around the 0.7893 zone and then immediately pushed down yet again from that level. Now let's head down to a smaller time frame and take a look at a trading opportunity on this pair right around that level. So we've now zoomed down to a 1 hour time frame, and yet again, for anyone with double tops and double bottoms in your trading plan, do you see an entry reason that you could have had on this time frame based on last week's analysis? If we look right here, you can see this nice double top formation that came in, one top neckline, double top, and the market proceeded to push down pretty nicely from that area. So that's what we were discussing last week here on the Aussie dollar. Let's go ahead and zoom back out to a daily chart and take a look at what we can expect throughout the rest of this week on this pair. So currently this market right below the 0.7819 area. If this market pulls back up and the body of that candle closes above that zone, then we'll be looking at this level as support. Yet if we close below this level, then we'll be looking at that level as resistance next. It'll be the 0.7819 level as the first level of resistance if we get a close below that level. And if the market pushes down from that level, then the level of support we'll be paying attention to is around the 0.7735 area. In that area is where we'll be looking for long trades. If we break below that, our last level of support we're going to be looking at is the 0.7618 zone here on the Aussie dollar. Now, if this market pushes back up, then we'll be looking yet again at the 0.7893 zone as a level of resistance we can pay attention to for shorting opportunities. If we get above that, we got a pretty long ways to go, all the way up to our 0.8023 area here on the Aussie dollar. So those are the things we'll be paying attention to throughout the rest of this week and probably into the next few weeks here on the Aussie dollar. Go ahead and move on to our final pair, which is going to be the pound dollar. So here on this pound dollar chart, not much changed, but we do have this 1.3237 level that was support last week, now changing into a resistance level here on this pair. So right now hovering around that resistance level at 1.3237. It's the level we'll be looking at for shorting opportunities out of this pair. If we push down from that level, our first level of support will be around the 1.3056 level for the pound dollar. If we push below that at 1.2850 will be the next level of support we look for long opportunities. If this market pushes up and continues higher, we'll be looking at the 1.3441 zone as a level of resistance to look for shorting opportunities out of this pair. And if we push higher than that, then we'll be looking at the highs right over here for our next shorting opportunity around the 1.3597 zone. So in the immediate future for this pair, looking for shorting opportunities around the 1.3273 zone. And that's what we're paying attention to this week out of the pound dollar and out of the top 5 major pairs. Throughout this video, we've talked a lot about backtesting and creating a trading plan around a rules-based strategy. And if you'd like to learn a little more about those subjects and learn more about the entry reasons that we use here at the Trading Channel, then all of that information is provided to you in the EAP training course. The EAP training program has already helped many traders on their path to becoming profitable, and I'll throw some of their testimonials up on the screen in front of you now. This course also includes weekly analysis provided to you through email that shows you trades that I'm planning to take throughout the week, and we send those out at least 3 to 5 times each and every week. So if you're someone who's been struggling and consistently losing money and you'd like to try something new and invest in your trading education, then check the EAP training program out by clicking the link in the description. If you got value out of today's video, then make sure to go ahead and click that like button to help support the channel. Don't forget to hit that subscribe button if you're new to make sure you're alerted whenever we come out with new weekly market prediction videos as well as new educational videos each and every Friday. Also, if you'd like to get your hands on the backtesting spreadsheet that I personally use, then you can find out more about how to do that by clicking the link in the description labeled Spreadsheet Mastery Course. Thank you guys for checking out this week's video. I wish you the best of luck on all your future trades, and I'll see you next time.